recording here. All right, there we go. Now we're recording just for you, Jason. Let me add a study in here. Let's see. Average true range. Average. Average true range here. Apply. Close. Close. Okay, now the reason why I have the average true range in here, okay, average true range tells me how much a stock moves in a day on average. Does that make sense? Uh-huh. So right now, so how much, according to this, right over here, how much does XLF move in a day? There you go. All right, so I know for each day, okay, so let's say over, each day it moves 31 cents, okay? So if I go back over here and I look at my delta is 14, right? If it moves 31 cents, that's basically 33% of a dollar, right? It's 31% of a dollar, right? So I know that it will move also 31% of delta. So 0.14 times 0.31 is it moves 4 cents. It's going to move 4 cents. My option price can move 4 cents every day to the upside or to the downside. Does that make sense, guys? Okay. So basically, I can almost gain if that's 4%, let me think about it. If I paid 13 cents for this, right? That's that what we're talking about. We're paying 13 cents for that. And it moves 4 cents, 0.04 divided by 0.13. It moves 30% a day in my favor. So this is where Taylor is talking about. It's not about how much money you make. It's about the percentages. Now think about it. You know your max risk is $26 or $26 per trade, right? And here you're in a trade, and if you go with Tastyworks, it's going to cost you $1 to get in and $1 to get out for the commission. But you're only risking $26. And so whether it goes for you or against you, you don't really even care. Does that make sense? I mean, if you lose 26 bucks, it's horrible, but out of a $1,300 account, it's not that much. At least this is the way you should be thinking about it. You should be thinking, when I enter a trade, I don't really care if I lose this money. Okay? I mean, but you do care, but you don't care. Right? It doesn't affect you emotionally or mentally whether this trade works out for you or not. Because the amount of money that you're making is so, where you're risking is so little, it doesn't make a difference. But the setup is key, right? This setup is a good setup over 64 days, and I'm willing to bet $26 that it's going to go up over the next 60 days because the setup is key, right? But risk management is way more important because I could be wrong. And if I am wrong and I bet 50% of my portfolio and it goes against me, then I have little money to make another trade. Does that make sense? Yeah. Yeah. Plus commissions, right? And then plus, if it doesn't go against, if it goes against you, and then oh man, I'm gonna roll it over, or I'm gonna, this is right, exactly, and I don't mean to hammer on you, Lakita, but I do the same thing. Trust me. You know what I lose when I was just sharing with Lakita when I lost $5,000 in one trade in one day. It went against me, and I said, "Damn it! This has got to go for me. It's got." So I added more money, and then it went against me, and I added even more money, and I'm losing money faster than until I just couldn't take it anymore, and I had to get out. So no sense in throwing good money after bad. If it doesn't work out for you, then just let it go. Just let it go. Why are we stressing ourselves out? And you know the reason why you're stressing yourself out is because you bet way more money than you should have, right? And once again, I'm telling you, I've done it 1,000 times, so this is the reason why I know. So, if anyone should feel, yeah, exactly. I mean, so why do we keep doing it to ourselves? And that's sort of a psychological question. And the reason is that we want to make money. I think the driving force is that we want to make money. And because you want to make money, you take more risks than you need to when what you really should be doing is this risk management. You should be managing how much money I'm going to lose per trade. And when you do this versus try to make money, you'll make money doing this. It'll be slower, it'll be safer, and it'll be a lot more fun. But until you do this, you will lose money. I almost absolutely guarantee you 100% if you don't manage your risk, and you break this rule, you will lose money. I guarantee it. I guarantee it. I didn't believe it, but I believe it now. And it's taken me 2.5 years to believe in this. So you know, if you lose money, it's your own damn fault. Absolutely, absolutely. I think I sent it to you already. Let's see. I tried to send it to some people here. Let's see here. View only people. I sent this out just earlier, right, Lakita? Um, okay. Let's see. What's your email address? EWILLIAMS. What was it? 361? 361 at gmail.com. There you go. Yeah, I mean, and you know something? All of this stuff is fairly technical, you know. You just got to go over and study it. It makes perfect sense if you just go over it and study it, okay? So, I'm expecting this to move up, okay? I don't in some respects, I don't have a stop loss on this because I already made my stop loss by my entry price. Does that make sense? That is my stop loss. My stop loss is $13. For Lakita, she could buy two contracts for $26. I already know what my stop loss is. So in this case, I don't need to set a target for a stop because I already know that I'm just going to let it expire worthless and it's not a big deal if it doesn't work out. Does that make sense, guys? Yes. So I recommend you guys go to Tastyworks and open up an account here because the commissions are only $1. Okay, and if you're messing around with only $13 at a time, right? And your commissions are $5 in, $5 out, that commission is gonna kill you. All right, does that make sense, guys? You gotta have your commissions as small as possible. Yeah, Tastyworks. Yep, go to Tastyworks. And yep, okay, that's great. Yeah, go to. Yeah, exactly. Because when you're, yeah, when you're working with such small amounts, it's tough to make money. So you have to save money. Yeah. And see, so isn't that also part of risk management? We're trying to manage our money by not paying as much commissions. Okay. All right. So let's get back to percentages, because you guys are talking about in the money, out of the money, right? Well, okay. It's in the money is best for what? Yes. Yes. Well, it all depends. It all depends on the setup. Uh huh. Yep. Yep. Yeah, I agree. I think ETFs are a good way to go because the deltas are really good as well. Because if you look at it, guys, if this goes in our favor, 1 point, we made 100%, right? If this is $13, we're risking $13 for 62 days. If it goes 1 point for us, we made 100%, over 100%. All right. Uh huh. Yeah. 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 Yeah, and see, so there's a couple ways you can do it, right? So you can go in the money and you'll make money faster, but then what you need to do is, let's say, if I wanted to set a stop loss on it, so a no-brainer way, Lakita, is to buy the 13-cent option. Okay, if you don't want to do that, like for SQ, I set a stop loss on it. So really, I'm in it for 160. My trade price is $161. I don't want to lose $161 on this trade. Okay, so what I did is I set a stop loss on this. So if you look at it, I entered in for $1.61. Let's see here. So basically, what I did on this one is that I set a stop loss as okay. I only want to lose 20% of this option. So I took what the cost of 20% of 161 was, and this thing's not working. Um, and I set a stop loss below that. I don't know whatever it is. Let's see, 1.61 times point 0.2, 32 cents. So my stop loss is going to be at $1.60. Is basically what's going to happen. Okay. So this server is unavailable right now. Does that make sense? So once again, you can just buy an option that your max loss is $13 and don't have to set a stop because you already set a stop. If you lose everything, it's $13. Or you can buy one in the money and then set a stop of I only want to lose 13, 20% of it. But here's the thing. Your stop, when you set the stop, you got to try to figure out how far is it going to go down. So if it goes down to, let's say, okay, you enter, let's say you enter here, okay? And I enter here because it bounced right off of the daily 100, right? Here's a doji. It found support. It's over the 200. Now it's back over the 9. I think this is going to be a good setup to the long side, okay? Now, the problem is that you have to figure out where your stop is going to be. So if your entry is here, am I going to use the daily 200 as a stop, or am I going to use the daily 100 as a stop? See, and then this is where you have to make a decision, right? You have to say, hey, you know, uh, you can just say, okay, if you want to use the daily 100 as a stop, if your entry price is 28.10 around there, and your exit price is 27.60, you're 50 cents away. Does that make sense? Your stop is 50 cents. You're legitimately, your technical stop is 50 cents. Does that make sense? Because if it breaks below the daily 100, I know this trade is not going to work out. Does that make sense? Right? So exactly. Okay. So yeah, this is a legit. This to me, this is the most legitimate stop, right? What we have right here. Okay, back below 27.59, 27.60. That is the stop. So it's a 50-cent stop. And then what am I trying to shoot for? I'm trying to shoot for it to break over the squeeze and to get to this macro pivot, because I know this is about $1. If I enter here, and I think it might go up to maybe to this level, 29.10, this happens to be $1. Okay, if it gets up to here within 60 days, I made 100%. Okay, so yeah, exactly. Uh-huh. Yeah, exactly. And that's the most wisest thing you can do. And yes. Uh-huh. Exactly. Exactly. Yep, yep. Yeah. e- Exactly. That is exactly what you have to do. And it's a lot of work. It's a lot of freaking work to do all that. But I'm telling you, yeah, if you don't do all that work, you're gonna lose money. Yep, yep, yep. Well, okay. We actually what we have to say, it's a high possibility. It's a high probability trade, but there's no guarantees. All right, So the thing is that, see, but you're absolutely right. If we take 10 super high probability trades, I will bet you 70% of them will work out in your favor eventually. Yep. Yep. Yeah. Just yes. Yeah. Yep. Exactly. Yep. Fridays, Thursday, Wednesday. So this was your entry here on this day here. That's Wednesday. So yeah, I don't know what his I like this. I like this, because it's above all the moving averages, right? If he entered on Wednesday, like he said, you know, it went down, it broke above. A lot of times when these stocks go and it breaks above the daily 200 like this, it doesn't go the first time. It breaks above, it goes down, retests it one more time, and then as it begins to break over the second time, then it goes. And so if he got in on Wednesday, I would say that's a perfect trade. You got it, and then if you look at this candle, and this is some of the other technical stuff that you got to do. This is a big full candle here with small wicks. It opened up lower here, but it ended up, you know, the bulls bought it up and it ended up here with a pretty good looking candle. It's almost full here. And then the next day it gapped up and it went up even more. Yes. Yeah. The only thing I really use is the daily chart. The daily chart, and I might look at some of those a little bit slower time frames to see if enough volume is coming in, but I basically just go by the daily chart. I mean, if you look at this looks pretty long to me, right? I mean, this has been down, down, down. It's been climbing up, climbing up. It broke over the 200, retest. The nine's coming up, the 20's coming up. The blue line is the 20, the nine is the green, and this is a perfect trade. This is a perfect trade. To me, this is a perfect setup. And then from here, it could go up here and then reject back down. It could. So what you're doing here is then you're going to use risk management, right? You're saying if it works out for me, great, but I'm only going to risk $13 or $20. right? And then when you do that, then you're doing the proper trading because let's go look at XLP. X XLP. If you traded this, so if you're gonna trade XLP, right? Um, this is a great long setup, right? We're agreeing with that. So the question is, where is my target price? Where's the profit window? Okay. So if I do the profit window, I got to go back in time to see where the resistance is going to come from. So here's the resistance right here. So you see how I'm marking these lines, Nikita? The top of here is resistance. The top of here is resistance. The top of here is resistance. Okay, and these are the major resistance areas. Yes, let's not make it too complicated, man. Let's keep it really simple. Am I right? Let's keep it really simple. E- Exactly. You see how it went up to the high here and then came back down? Well, that's definitely a high. That's definitely technically that's resistance. That Yep, I agree. I agree. I absolutely agree. Reading that, but you can't stop your education. You absolutely have to. Okay, so basically, a lot of what he's saying is that that candlestick patterns will form off of support and resistance. And if you know how to read the candlestick, that's even better. But it ultimately ends up creating what your setup is on whatever chart, or daily chart, intraday chart. So really it comes down to what is the setup that I'm looking, because you're not going to take any trade. You can create any trade, right? And say, oh, this is my risk versus reward. This is what my max loss is, but if you don't have a technical setup for you to take that trade, you're just throwing money away. You're just throwing money away because so it all comes down to the setup first. You have to get the setup. If the setup looks good, then you use risk management to try to find the right trade to take. So if I were going to trade XLP, if I were to trade XLP now, I'd be probably looking 30 to 40 days out. So let's say if we're looking 31 days out, 34 days out, and let's see, you could look at 12 cents right here. You could look, your max risk is $12, your delta is 13, so you know if it goes up a dollar, you're gonna make 100% on 12 bucks. You'll make 12 bucks, 100%. So if you don't want to set a stop loss, you can just buy this one right here. And look at that's crazy deltas. That's crazy. For $1, you're gonna make 100%. So then you go back here, you go back here to your chart here, and he says, hey, can this thing move? If I enter here, let's say I entered it last Friday, can this go $1 for me? And here's a technical stop right here, right? Here's your technical stop right here. Right there. That's support and resistance right there. Well, that's resistance right there. So if you enter here, you have a decent shot at getting a dollar here. But the problem here is that it could, because it's popped up pretty nicely here, you could get some retracement down here for a little bit before it continues up here. All right. So this might be a little bit late to get in. Okay. It'd be riskier to get in. Now, if I really were to trade this, I would not trade this until the price action got closer to the 9 EMA on the daily chart. Then I'd enter here, hoping that there'd be buyers who also want to buy to go long at the 9 EMA. Does that make sense, guys? So that's where I would get in long. He's already in long. He's he's definitely profitable, right? Because if he got in on this day, 53, and he's up to 55, a buck 50, he's already, if he bought the option that we had, he's already up 150%. What was how much time did you buy? Yep. What strike price did you buy? And then how much time did you buy? Did you buy the weekly, the monthly? Okay. Uh-huh. Yeah. Uh-huh. So that's huge. That's huge money. Yeah. Yep. So here's a good point here right here. Let's look at this real quick. This would have been a good entry right here. This would be an okay entry right here. He got in on Wednesday. Tuesday could have been a decent entry. So it's Friday, Thursday, Wednesday, Tuesday, right? Your entry could be here, right? Now, if you sized up too heavy, right? The next day when it opened here, it went down here, and you might have stopped out. Yep, right here. Well, it opened here. It went down way below it went down 30 cents, 30 cents. Well, let's see. It went down 20 or 30 cents below the 200, but then it came back and ended up strong. And then this is where you got in here. And so yep, so he got in, somewhere in here after it, came back and bounced this and went long. Yep, exactly. Yeah, exactly. So you guys see the setup here? The setup is it's taken forever for it to get back above the daily 200. It got up, and you could have made money here, but I'm telling you, for a longer move, the first break above the 200, it never goes long. It breaks above here, shoots up, then it comes back down, retests, and then as it gets long here, this should be a better sustained move to the long side. So this is your setup. And then you got buyers down here, right? Because it didn't continue to go down. It went down for a bit. People tried to take a short below here, but it got bought up because you see the big wicks here. It got back above the 9. You could have entered here. And if you use proper risk management, Lakita, you would have just bought here, whatever option it was, 30 days out, you're going to buy, or 40 days out, your max risk is going to be $26. So you're only going to buy one that's $13 or 26 cents or less, right? And then so the next day, when this happens to you, you don't care. You don't care because you use proper risk management. This does not phase you. If this end up going all the way down here, you use proper risk management, and you lost everything, which is $26, which is no big deal. Which is no big deal. But this setup is perfect, so you don't even need to get out. You don't care. I got 30 days for this to go my way. And then the next couple days go by, and you would have looked like a prophet, right? You know? Yep. Yeah. So I think the best thing for you to do, Lakita, is buy an option that is already built into your stop. You buy an option, you buy this one, and you let it expire worthless, or you get out when you make 20, 30, 40, 50, 60%, and you're just out. Okay, but that part of that has to go into your delta. What are your deltas, right? Because you don't want to buy this for 14 cents and your delta is only a penny or 5 cents, right? Because then it's got to travel 3 points for you to make, you know, for you to make good money on it. But see, that's why the deltas are really important. Because if this goes up $1, you're gonna make, over 100% on this, 150%, right? And then you got to go back here and says, hey, can this from here go up $1? And then when you look at this chart, it's like, this looks pretty damn good to me. Price action is above all the moving averages. All the moving averages are down here. It's already broken over the 200. It's come back down. It's being bought up again. If we look at the long trend, right, it's going up, right? It's going up. So only thing we need now is a good technical entry, manage our stop by, buying an option that's, that if it expires worthless, we don't care. And it has a good delta. It has a good delta that for every point it goes up, we're going to make, 50 or 100%. And then once you buy it, if you do tasty, you can do it on whatever you want. I mean, if you're going to get in at a certain price and you say if it goes up $1, that means I'll be up, 50 or 100%. I'm going to exit at that price. Boom, you exit at that price, and then, man, and then you just got to feel good about it that, hey, I made a great entry. I managed my risk and I made 50%. And who cares if it's only $10 or $12? You've proved to yourself you can manage risk and you made 50%. Who gives a rip? Right? And you just continue to do that every day. Don't chase money, right? The most important thing is risk management. Manage your risk. Because if you don't manage your risk, all your setups and stuff like that, then you begin to doubt yourself. Then you get emotional. You loot. You sell when you're in a loss, and then it goes again. Then it goes back in your favor because you technically read it correctly, but you just didn't manage your risk. Okay, guys. All right. So I'll share. If you want, you guys can share this with each other. I don't know if I'm the only one who can share this, but if you want it, just ask me and I'll share it. Shoot me your Gmail and a private message, or let other people know, and I'll just add them to this. And I'll continue to work on this step by step thing on how to trade, and what you're looking for. Okay, guys. Okay. All right. Take care, guys. Bye bye. Right on. Right on.